Dianne Blick with Keller Williams Hometown Partners, Blick Homes here in Hutchinson, and I'm delighted to welcome you today to Essentials with Dianne. My invited guest today is Radley Brooks, Division President with Primary Residential Mortgages, and thank you for allowing us to be here in your conference room today, and thank you for your time and joining me.
Yeah, thanks for inviting me.
Always, always. So our conversation today stemmed from a discussion that we were having, I think just a week ago, and it had to do with forbearance and the issues that people are currently facing or will be facing because of this thing called forbearance that came about because of COVID. And I know we started by talking about our concerns and the fix that people could be in if it weren't being addressed. And the more Radley and I talked about this and the more knowledgeable I became from what you were sharing, the more I felt like we should make an essentials video on this topic for those that are. So I guess let's start with, what is forbearance?
Okay, no, that's a great question. I feel like it's probably one of the biggest questions in the last year that people have either asked us about, or it's something that surfaces on a daily basis. A forbearance essentially is where the lender is turning around and all of your payments that you're supposed to be making, and maybe you're not making because you're doing this forbearance, this money's being put aside as almost a whole separate loan. And that's the part where I think that most people get confused by, is because they think, well, I don't have to make my payments while my mortgage is in forbearance, when really they have this money that just keeps growing in this extra loan. It is an interest-free loan, but it's still there and it's not going anywhere. And then once somebody gets to the end of that forbearance, either one, they've returned back to work, or if the government sticks to the June 30th deadline where they're not going to extend the forbearance periods anymore, then a homeowner's going to have to address a solution at that point. So at that point, they're either going to have to start making payments back on this separate loan, or if they said, well, I can't afford my normal house payment plus the payment on that second loan, then they're going to have to look at like a mortgage modification, or they're going to have to look at adding this whole entire loan onto the end of their loan. So again, it's something that's always going to stay there and sit there. And if they sell their house or they refinance their house, it's going to have to be addressed at that point in time.
So it was a program that was started because of people losing their jobs or becoming ill during COVID. So it was a new program that was rolled out by, was it a government-initiated program, or was it a lending institution-initiated program?
No, it was the government that came out and told the lenders that they don't want to see that instantly the mortgage servicers are going after and foreclosing or forcing people. And not only that, it was also one of those things where they felt like there's so many people that are losing their jobs that if we had to base this off of supply us with letters and pay stubs and all that kind of stuff. So they made it super easy for a consumer just to call their lender and say, hey, I would like to put my loan into a forbearance, or I'm having troubles making my payments. So the lenders were told, you must work with the clients and you must help these homeowners find a solution. And if that means not making their payments for a little while till they can get back on their feet, then they need to go into a forbearance. So the government definitely wanted to see this as a very quick solution.
Well, and that's part of the problem, that it was a quick solution. So when this was first announced, I called my lender to ask about this because I wanted to understand it from the perspective of people that I had put in homes in the last few years that might be facing this situation because they were out of work or sick or whatever. And so when I called my lender and I said, if I needed to do this, I didn't get a really good explanation of how it would work. And I don't think it was because my lender didn't want to disclose. I think that in the beginning, no one really understood what it really meant.
That's correct.
Yeah, and so when you mentioned a little bit ago, the money growing, it really is a mound of debt, a molehill mound of debt growing because of the interest that is compounding onto that second loan.
Right.
And I think that was never explained in many, many cases.
Yeah, and so I've kind of told people that if you say I had a $120,000 mortgage and you put your house into a forbearance and you wait 10 or 12 months till you either start making payments or get back on track, well, you've gained so much, you're so behind that you're going to spend the next 4.5 years making payments again until you're back to a break-even spot. So that's, like I said, the biggest part where I think that people didn't realize that, yeah, it's helping me in the short term, but don't realize how much further that's setting them back now to be able to get their payments and their principal caught back up to where it was before they put it in forbearance.
Yeah, it could be very scary to look at what the numbers will really look like and then what it takes to dig back out, if it's even possible.
Yeah.
So now I know with the $1.9 trillion package that was just passed in Congress, was it only last week? Yeah. I think it was. The rumor is that there may be something buried in there that helps, but from my understanding, there may be, but there's not a big pocket of money.
That's correct. You have like 2.8 million people currently that are in a mortgage forbearance. So there was $10 million that was set aside to help homeowners that are struggling to make their payments or to get caught back up. And it's going to be based off of a first come, first serve. It appears that there's going to be income limitations too, that if your income's over a certain amount, you may not qualify for any of that assistance. So a lot of that is so new for us to still try to see what is the meaning behind this, but we already know the dollar amount. It's 10 million, and it's not enough that would, if everybody said, hey, I want to take advantage of that, or do I qualify, you would want to do something more sooner than later.
For sure, for sure. So I guess if somebody is feeling like they're going to wait for that to help them over this hump, that might not be the most proactive, best result of things to do.
That's correct. Yeah. I would, if I was in that situation, I would definitely want to call my servicer as soon as I could, call the bank, call the credit union, whoever your loan's with, and ask them, hey, I want to get out of this forbearance. How can I do that? What options do I have? And again, maybe bring it up that you heard that there might be some assistance that are available, and start that process and kind of be first in line if you are going to qualify for that.
So that's one thing that you could do. The other thing you could do is, this would be drastic, but it might be a solution, and that would be to sell your home in the hot market that we have across the United States, where home prices are going considerably over asking in most cases, and fast. Mm-hmm. Of course, that leaves the question of, how do I take care of my family? Where will I go? And, interesting data on that. So in this market, we have sold as many houses in our area market this year to date, as we did the year prior, year to date, just pre-COVID. Mm-hmm. But we've sold that many with only 1/3 as many on the market. So everything is selling that's sellable and even beginning to be priced reasonably. So there are ways to move, and I guess as a real estate agent, I would say to people, there are homes available, and we will go door knock, we will mail postcards, we will call people to find a solution for folks that do need to take that action. But the part that was on the forbearance is just not going away.
Right.
So as a lender, what next steps? Where do you go? Where do you go with this? And can we should probably talk at some point in our conversation about the impact on community of all of this. So we know there are 2.8 million people who had requested forbearance, mm-hmm. who are in forbearance. So what does that mean on a community level?
Well, it's kind of interesting because forbearances aren't something that you talk about when you're hanging out with friends. It's kind of one of those things that it's kind of a private thing but the thing that I try to explain to people is that I know this is something private that you and your spouse know that you've decided to do, but I definitely say, like anything, the more proactive that you can be. If you sell your house, the great thing about that is that if you can sell your house and pay off both of those two loans, your credit's preserved. So even if you had to rent for 6 months until you can buy something, you have the ability to buy. And that's, again, the beauty of it, is that you can sell your house. If you have to rent short term, your credit's great, you can buy again. If you wait too long and the forbearances don't get extended and you have 1 or 2 30-day lates on your mortgage because you waited too long, then you may be in a worse position with credit and or a longer seasoning until you're going to qualify to buy another house. So yeah, so while the market's hot and while you could turn around and sell it, and that could be a solution, even to help you sell it and then just go and buy another house. So
Yeah. As you're explaining that, it makes me feel sick to my stomach to think about anyone that I would know that is in that position. It's got to be terrifying, because losing our home that's a really big deal. And it isn't something that people want to talk about. I guess this might be a time to just pause for a second, because we talked about this when we had our conversation about how heart-wrenching this could be and financially devastating it can be. And I think one of the things that we want to say to our listening audience is that both you and I are open at any time to a totally confidential conversation with anybody that wants to talk about their issue that they're facing and try to have help building a plan forward.
Right. Yeah, I feel like those are almost every day we're having those confidential conversations, coming up with a strategy and a plan to try to help. There's usually more than one way and more than one solution, but sometimes you just have to sit down with somebody that's in the real estate arena, and sometimes it takes the lender and the realtor to work together to find those solutions too. So yeah, we do that on a regular basis. So we do always encourage people to get ahead of it, get in and set an appointment with one of us to help kind of look at each, because everybody has kind of their own unique situation. Not everyone's going to be in the same. So
yeah, I don't see it as being a cookie cutter situation, because people were off for different amounts of times.
Yep.
Mortgage amounts are different. Lender process is different. Your servicing mortgage holder, those are all different. And then on top of that, needs are different.
Yep.
Family needs are different. And things have changed so much as we all kind of grappled with how to work and live during COVID. And working moms, working dads, all professionals, working through all of that. So what's the time frame was there a time frame given for forbearance? Like, if you asked for it, was it a 6-month deal, a 12-month deal?
No,
or was it...
when they first came out with a forbearance, it was for a few months. And then what they've done is they kind of keep extending it. So we saw it through October, we saw it through December. The latest is June 30th. We do feel like that might be the date that ends up sticking. So again, people that have either gone into forbearance or they've gotten out of their forbearance situation. But right now, June 30th is kind of the ultimate deadline at the moment. But yeah, it's kind of been a moving target and a moving that as they felt like that the economy's still not recovering and the jobless claims are still on the rise. But at some point, they're going to have to just identify as this is the end. So
if June 30th were the deadline, or even if it gets extended until maybe Labor Day, what would happen? If I am in forbearance, I haven't paid my mortgage, I've got this second loan mounding up because of compounding interest on it. It's compounding interest, right? Did I use the right term?
Yeah. Well, keep in mind that second, though, right now the government says that you're not to charge interest on the second. You still have your interest on your first mortgage, but not on this set aside second amount that they're setting aside. So if you do at the end of this, you're going to have to make a decision, or your lender's going to start asking you just to start paying back all of that money that is on that second. So what I was trying to say is that if you avoid the phone calls, you don't get ahead of it, you're just going to start getting stuff in the mail that tells you that you need to make your mortgage payments again starting next month, and also you need to start paying X amount of dollars on this other amount that you've not paid on for the last year too. So if you don't call them to set up either a modification, a payment plan, or a plan to put that onto the end of the loan, you'll quickly find yourself in a bad situation, and that's harder to get ahead of.
Because will then the interest start applying to the second loan?
Yes.
So do you think that payback is going to be negotiable?
No, I don't think it's going to be negotiable. I think that what we've seen already is they've said, well, they want to stretch out those payments over 12 months. So, I mean, we're still talking that could be $400 or $500 extra on top of what their current mortgage payment is. So 12 months is kind of the targeted to be paid back for any of the back amount. So that's again why we've kind of said is that you really want to get ahead of this. You want to get out of that forbearance as soon as you can.
Okay, well, this might be a good place to just take a little break before we go to the next segment. It's kind of some overwhelming information, isn't it?
Yeah, there's a lot to it. There's more to it than it seems like at first.
So my name is Dianne Blick with Keller Williams Hometown Partners, Blick Homes here in Hutchinson, and I'm with Radley Brooks, Division President of Primary Residential Mortgage here in Hutchinson. And although you do loans all over the place, yeah, your crew's pretty busy. And we just want to say thank you for stopping in to learn. You'll find our contact information on the screen. And again, we said earlier, confidential conversation, we would be delighted to take that anytime and to help provide some solutions, working together for how to make that forward. Or if you just have questions that you want to ask and you think Radley would be a good source, that's what we're here for. So thank you again for checking in with us, and we will finish up with segment number 2.